Chapter 5, Corporate Social Responsibility, presentation by Sarah and Patty. By social responsibility, we mean the intelligent and objective concern for the welfare of society that restrains individual and corporate behavior from ultimately destructive activities, no matter how immediately profitable, and leads in the direction of positive contributions to human betterment, variously as the latter may be defined. Quote by Kenneth R. Andrews. Definition of corporate social responsibility. Corporate social responsibility as referring to the responsibilities that a business has to the society in which it operates.
Responsible versus responsibility. The words responsible and responsibility are used in several different ways. When we say that a business is responsible, we may mean that it's reliable or trustworthy. A second meaning of responsible involves attributing something as a cause for an event or an action. A third sense involving attributing liability or accountability for some event or action, creating an obligation to make things right again. It is the last sense of responsibility as accountability that is at the heart of CSR. Corporate social responsibility refers to those actions for which a business can be held accountable. We can think of responsibilities as those things that we owe or should do even if we want rather not to. Social responsibility is what a business should or ought to do for sake of society, even if this comes with economic cost.
Distinguishing between three types of responsibilities. The most demanding responsibility, often called duty or obligation in order to indicate that they oblige us in the strictest sense, its responsibility not to cause harm to others. Example, businesses ought not to sell a product that causes harm to consumers. Responsibility is to prevent harm even if those cases where one is not the cause. Example, acting to prevent harm even though there is no strict duty or obligation to do so. There might also be responsibilities to do good. Example, volunteering or charitable work. For example, several years ago, a controversy developed over the drug Voix, produced by Merck. Some evidence suggests that Voix was responsible for causing heart attacks in some users. In the debate that followed, two questions required answers. Was Voix the cause of the heart attacks, and was Merck at fault, i.e., should it be held legally liable for the heart attacks? Once the causal question is settled, we might then go on to ask if the manufacturer is responsible in the sense of being at fault and therefore being liable for payment for the damages caused by the product. Both ethics and tort law involve the question of liability or fault for causing harm. 4 models of corporate social responsibility.
The first model that we are going to analyze is the economic model of corporate social responsibility. From an economic perspective, a business is an institution that exists to produce goods and services demanded by society, and by engaging in this activity, the business creates jobs and wealth that benefits the society further. On this narrow view, the social responsibility of business managers is simply to pursue profit within the law, because profits is an indication that business is efficiently and successfully producing the goods and services that society demands. Profit is a direct measure of how well a business firm is meeting society's expectations. This common view of corporate social responsibility has its roots in the utilitarian tradition and neoclassical economics. By pursuing profits, a business manager will allocate resources to their most efficient use. Consumers who most value a resource will be willing to pay the most for it. So profit is the measure of optimal allocation of resources. The following 3 models are alternatives to the narrow view expressed in the economic model of CSR.
The second model we will be analyzing is the philanthropic model of corporate social responsibility. The philanthropic model of CSR holds that, Like individuals, business is free to contribute to social causes as a matter of philanthropy. From this perspective, business has no strict obligation to contribute to social causes, but it can be a good thing when they do so. Within the philanthropy model, there are occasions in which charity work is done because it brings the firm good public relations, provides a helpful tax deduction, builds goodwill and/or a good reputation within the community. In these cases, businesses have engaged in supporting these activities and they have received some benefit in return. Of course, there are also those cases in which your business might contribute to a social causes or events without seeking any reputational benefit. In one case, the social good is done as a means to an economic ends. In the other, it is done as an end in itself. From the perspective of the economic model of CSR, only philanthropy done for the reputational reasons and financial ends is ethically responsible. From the perspective of the philanthropic model, philanthropy done for financial reasons is not ethically and truly an act of social responsibility.
The next model is the social web model of corporate social responsibility. The social web model views businesses as a citizen of the society in which it operates, and like all members of society, business must conform to the normal ethical duties and obligations that we all face. While producing goods and services and creating wealth and profits are among businesses' responsibilities, they do not trump the other ethical responsibilities that equally bind all members of society. Philosopher Norman Boyd has defended one version of CSR that would fall within the social web model. Boyd argues that beyond the economic view's duty to obey the law, businesses have an equally important ethical duty to respect human rights. Boyd identifies his approach as Kantian theory of business ethics. In simple terms, he begins with the distinction between the ethical imperative to cause no harm, to prevent harm, and to do good. People has a strong ethical duty to cause no harm, and only a prima facie duty to prevent harm or to do good. Thus, while it is ethical good for managers to prevent harm or to do good, their duty to stockholders overrides these concerns. As long as managers comply with the moral minimum and cause no harm, they have a responsibility to maximize profits.
The last model we will be analyzing is the integrative model of corporate social responsibility. In two areas in particular, social entrepreneurship and sustainability, we find for-profit firms that do not assume a tension between profit and social responsibility. Because these firms bring social goals in the core of their business model and fully integrate economic and social goals, we refer to them as the integrative model of CSR. In some ways, sustainability offers a model of CSR that suggests that ethical goals should be at the heart of every corporate mission. There are reasons to think that sustainability promises to be a concept of growing importance in discussions of CSR. Sustainability holds that a firm's financial goals must be balanced against and perhaps even overridden by environmental considerations. From these perspectives, and success of a business might be judged not only against the financial bottom line of profitability, but also against the ecological and social bottom lines of sustainability. The sustainability version of CSR suggests that the long-term financial well-being of every firm is directly tied to the question of how the firm both affects and is affected by the natural environment. A business model that ignores the biophysical and ecological context of its activities as a business model is doomed to failure. The four models of CSR. Economic model of CSR. Primary responsibility is produce goods and services, seek profit, and obey the law. The philanthropic model of CSR has the same step as the economic, but also adds businesses may also choose to contribute to social needs as a matter of philanthropy for reputational and public relation purposes, but not as a matter of duty or social responsibility because it is the right thing to do. Social web model of CSR. Business in society. Business is embedded within a web of social relationships of mutual rights and responsibilities. Integrative model CSR. Part or all of the mission of the company is to serve some important social goals.
Reputation management. The practice of attending to the image of a firm is sometimes referred to as a reputation management. There is nothing inherently wrong with managing your firm reputations, and in fact the failure to do so may be poor business's decision, but observers could challenge firms for engaging in CSR activities solely for the purpose of impacting their reputations. If a firm creates a good image for itself, it builds a type of trust bank. Consumers or other stakeholders seems to give it some lack if they didn't hear something negative about the firm. Similarly, if a firm has a negative image, that image may stick regardless of what good the corporation may do. Plato exploited this issue when he asked whether or one would rather be an unethical person with a good reputation or an ethical person with a reputation for injustice. The author presents this example. He defined the 6 dimensions of corporate reputations. We get corporate reputation by emotional appeal, products and services, financial performance, social responsibility, workplace environment, vision, and leadership. In the long run, those dimensions will create an increase in sales, secure talented employees, earn investors' confidence, create business growth, gain market leadership, and build stakeholder loyalty.
Corporate social responsibility in business today. It is impossible to engage in business today without encountering and addressing corporate social responsibility. Despite substantial differences among companies, research demonstrates that almost all companies will confront CSR issues from stakeholders at some point in the near future.
Conclusion. In this chapter, we learn about corporate social responsibilities, the difference between responsible and responsibility, and the 4 models of CSR, and how reputation management motivates corporate social responsibility.